The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Friday the 17th of June, and welcome, Tiger Technicians Hour. Let's see if we can keep up that stellar level of technical analysis that started this morning with John Logan, going all the way through to Larry Pesavento, then of course Tommy, and Daryl. I hope I can do the same here. Then after this, you've got your swimming lesson with Think or Swim Options, great show. And then, of course, you've got Steve Rhodes, you've got Dave White, and Tom O'Brien wraps it up. So let's get to it. Dow's down 95 at 17,637. S&P's down 11 at 2,066. Comp index is, if I can find it, right here, move this away. Whoops, don't move that away. That's, let me just get the, there. I got to remember to go back to that chart. That's the 10-minute chart that I always like to look at. 10-minute E-mini. The comp index is down 46 at 47.99. The VIX is back in the 19.85 area. It's not in the 20s, but it's in the 90s. Boy, I said to subscribers, watch the VIX closely today. A lot of people will be thinking that we'll follow through, but there's a good chance we just have a mixed session. Well, it's not a mixed session. In fact, it's a down session so far. We do remain short in our positions. We added this morning. One of the shorts is up over 2% already. If subscribers were lucky, they were able to get long a particular stock pre-market when I sent out my newsletter. There was just a quick trade. They got it there at that level. Don't worry, I think we'll have another chance if you didn't get it, but it's up very smartly. In fact, it's in a sector that's doing fantastically. So we'll go straight to the QQQ. I'll go straight to the QQQ over here. QQQ, and that is down $1.63 at 106.41, making the arch formation. These arch formations are quite formidable in the Chapman wave methodology. And look what's happening. The weekly chart is going to test this trend line support. Just for the moment, I'm going to take out the 120-minute chart so you can see the monthly chart with half a month to go. We've got, we're under the 9-period moving average in the monthly chart. The Qs have not been doing very well. IWM, now here's something that's very interesting. IWM, on a monthly basis, is testing the trend line. It's got to, it's a 114.24 right now, down 31 cents. It's got to push even higher. Okay, now, gold. Gold is up, is down $6 at 12.92. Is that right? GLD, am I correct? Is there something wrong here? I've been looking at this all day, and the GLD is up 122.01. Is that 01 or 81? GLD. GLD, trading at 122.82, up 43 cents. Leg B, I'm going to make this just because of the way the chart pattern is. I'm just going to be very cautious about this. F/B. And a leg F in the weekly chart. That's why I want to be a little bit cautious here. And I'm going to do this. I'll look at silver. People ask me also, will I add silver? Sure, I always add silver when I remember. And silver has gone to a leg B. It is under the previous high. So this is what I call a gray leg B, meaning it's in a retracement failure mode. That's just an explanation to say that once, while it's underneath the previous high, it is retracing back to it. That could be a very bullish circumstance or bearish, but in this case, so far it's holding the 9-period moving average of 17.23. It's at 17.34, down 26 cents. And the weekly chart has made a peak D, and it's underneath the previous high. That was the high in the continuous contract of May the 6th, the week of May the 6th, 18.06. Let's go on. I want to look at high-grade copper. High-grade copper was bouncing, and then it failed. I just don't see anything. I keep getting asked about copper, and I keep saying, the chart pattern says lowercase h that can go to a lowercase m. Remember, these are patterns in the Chapman wave methodology. These are templates that are just locked in stone. When you start to see them unfold, think of them as such a cast that the mold that is so firmly in place that to break the mold is a very positive or bearish action. And so far, we're just in the mold, right? So high-grade copper not going anywhere. I was asked about platinum. Let's look at platinum PL. Also, same thing. I was asked the other day, what about platinum? I said, no, I don't. I looked at PTLT. What was it? PLTL? I don't remember. Someone might help me. No, I don't remember what the symbol was, but we're looking at it right now. I don't say that it's a big negative on the monthly or the weekly. I'm just saying the daily looks like PPLT. Thank you. PPLT. Mike, I knew someone was going to give it to me. There you go. See, this is the pattern that I'm a little concerned about. I think that it's a 93 PPLT, whatever it is. This is the ETFS, physical platinum shares. So they make this up. I suspect that it is shares, huh? What platinum shares would they have? I think it's closer to an ETN than an ETF. Whatever it is, to me, the pattern says it's gone to a peak C in the weekly chart. It's starting to fail here. Got to be real careful because at 93.15, I think it's going to take out 92, and then you'll start to see if the 90.50 area is going to be support. That's different. If it holds 90.50s, or it even doesn't get there, but it suddenly starts to trade in the 90, it really needs to get into the 98s. I know that's a far away. It's 5 points up. That to me would be really bullish. And at this particular point, I don't see it. In other words, I don't have a technical indicator right now or a pattern that says it's going to be bullish. So that's PPLT, trading at 93.15 down 18 cents. Let's get back to our story here. I want to look at US bonds. This is the continuous contract. This is a G/C. Now, I want you to do that because it's leg D in the weekly. It's leg maybe GC in the monthly chart. Still very positive. But look at this. The TLT is at I could give this an alternate count. I see no reason why, not why I should. The MACD is strong, the stochastic is strong, the market is weak. We're going lower, at least into next week. It's a leg D up. I think we're real close. I think by this time next week, I would not be surprised to see some kind of upside turn in bonds, bond yields, and downside in the TLT. That's the way I'm looking at it. Could be wrong, but that's what I'm looking for. And that suggests that the 138.50 high will just be broken. In other words, we'll go a little bit above the January high in the TLT, the Lehman 20-year T-bond fund, and that would be positive. Now, here's another thing. If I'm looking at, so that's a TLT, I did that. I need to just go to the dollar. You see the dollar's down at 94.23, down 34 cents. My thinking here is that we're going to see a lowercase h pattern, and what's really important is the low that was made on the 8th and the 9th of this month in the 93.43 area, double bottom. That's going to be really important because if there's a decisive close, the weekly chart will suddenly look very poor. If you're looking at the EUR, USD, it's the same kind of thing, just stuck in a range. Range bound for a little bit. We could actually start to see narrower trading early next week as a wait and see attitude comes. I'll be back. Basil Chapman, Tiger Technicians out, Dow's down 107.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. I'm going to go to our first call in just a few seconds. I completely forgot to come right back to this because it was so important to come back to it. This is the 10-minute E-mini. I can't recall yesterday if I actually said, I know I typed it in and I did everything and I spoke about a Trough G, but I don't know if I mentioned it. But in Elliott Wave yesterday, the E-mini did in the 10-minute chart, did a perfect Elliott Wave 5. And that was at the low of 2040.75. And then we got that V-shaped recovery. That's what I was talking about. Well, it went all the way back to the 2074s. 73, 74 level, and now it's on its way back, and it's testing what? It's testing the waveform on the way down, also Elliott wave, with the Chapman wave, of course, at 2055.25. So right here, very important. Can we have a turnaround for a little bit of a bounce in the E-mini? And we'll see. So I'll be back to that in a little while. Let's go to Myrtle Beach right now from Newton, Massachusetts. We're going to go all the way down to South Carolina to Steve. Hi, Steve. How are you?
Hi, Basil. Great, and you invited me to follow up on this one, and it held support. And I wonder what Faro looks like now.
You know, I think what's going on here in the marketplace, and of course this is an election year, so you've got to expect that every administration during the election year, somehow or other, whether it's done on purpose or whether it's whatever it is, the economic factors are in the favor of the elected. And that means that a lot of things can be held back or could be put on the front burner, back burner. They could be, as someone mentioned just a little while ago, I was looking at a certain stock and they texted to say, where was it? Let me just find that expression because it was really good, if I can find it. Yeah, it could be. These rotations into random industries are fascinating, like a line at an amusement park for a ride. So, and that's, you remember I spoke to you about the whole rotation thing, and that Faro, which we're looking at, FOE is the symbol, it's trading at 1433, up 12 cents right now. It seemed like there was something that was favorable because it had held the 9-period moving average. It was in leg D in the weekly chart, but the MACD was good. So, and what I'd recommended, I can't remember the exact price, but I think that as long as it held and didn't close below 1354, which was the low of the 1st of June, that means stay in the position. But I didn't advise I think I didn't say add to the position. I said just see how we can place it right now. Let's watch it. Is that kind of,
Right.
if I recall? Okay. So now what we've got is a very interesting stock, because what happened when we spoke, it was somewhere in the just about 14. It might even have been
It
a
was
tad
under.
under
Yeah.
a
It
tad
was.
under 14, right? So now we're looking at a stock that's at $14.34. The previous high that was made with an alternate count, which now I can say. Remember, I said I have a question mark here. I one of the few times that I'm holding off and I'm saying I don't know if I can give this an official wave count, and one of the reasons was EF. This is now it's becoming even more complicated, but I'm going to do this and I'm going to show you what I'm looking at, because to me what I have now is some clarity in the Chapman wave, and the Chapman wave says that the high that was made at peak D right there on the 28th of April at 1337 saw a pullback to the 1209, was it 1220 area on the 6th of May. That ran up in a very strong leg to the upside, but I can't really call that a new leg A, because in the Chapman wave methodology, you have to wait for a trough to be made. In other words, I need a higher low bar. I haven't got it, and this bar went above the previous high, so I now leave it, and now I can do a wave count, and this means we've got peak A right here on the 11th of May at 1430. I can get rid of all these guys now, because as I said, I had a question mark, and that question mark said, it doesn't make sense. And now I've got some clarity, and I can go A, B is the high right there. It was at the 20, what was that? On the 26th of May. C is on the 8th of June. And we are right now, isn't this so interesting? And 14.50 was the high of the 7th of June, 7th and 8th. And today the high is 14.50. It needs 1 penny. I'm not sure it's going to get it, but it needs 1 penny to go to that D. So now I've got a little bit of clarity. Two things are happening. The weekly chart, because of if it closes anywhere here, 10 cents higher, 10 cents lower, it doesn't matter. The weekly chart has held its ground. It's held the 9-period moving average, had a spike down 4 days ago, and now it's back up again. It's looking good. Now, just remind me, you had positions which you were looking to add. Is that right?
No, I'm just holding I bought it in the low 13s. The company put themselves up for sale. That's the big bar on the left hand of your screen there.
Oh, right
that huge
there.
green bar. Yeah, the company put themselves up for sale. We haven't had any news or anything, but it's been holding really well. Seems like accumulation, so I'm just holding.
I'm so pleased you told me about that. There are two things that happen when a company which has been doing quite well puts itself up for sale. It's what I call, it becomes an active stock. It means that it's in play, and that means that rumors will filter every time it pulls back to a certain level. Someone will issue a rumor, or some brokerage house will say, "Oh, it's looking very interesting." So that means you've got, I think, from the way I'm looking at it, you've got a really nice cushion in the 13s.
Okay.
Maybe it could go a tad lower if the market really takes a dive. I'm not sure it's going to, but if it does, then what we're looking at is could go a little under 13. But this is looking pretty good. Now here's the kicker. Okay. In the weekly chart, the MACD and stochastic are solid as a rock. In the monthly chart, the month is not finished, it's halfway through, and for the first time, the MACD has actually crossed positive. I wonder why it's doing that. I'm just going to, for 1 second, do something else here. Oh, something happened to my chart. Oh, I don't know how that happened. My MACD has just disappeared. Let me get back to FOE. So this is the thing that I'm going to recommend to you. At this particular point, you could make a little double top. It could go to D. There's some resistance at the 1461 area. The way I'm thinking is that you could add another 2 positions. The one is right here at the 1432. I'm just guessing from the action over the last 4 days that unless the market really takes a dive, this thing should hold 14. if the market is just mildly low over the next few days, if it's market related. At this point, it looks like it's a little bit independent.
Right.
So if you are obviously below 14 would have been a better place to add, but we're only talking a few cents, and I'll explain why I'm thinking that this is a place to add. Just a little nibble, and the nibble is for two reasons. If you have a nibble here at $14.32, the high is already 14.50, and it looks to me like it does want to make a D, and it could go just a little bit higher. And as I say, the resistance is going to be very strong, around about $14.60. So if you took a little nibble here and it actually broke out and it didn't pull back all of next week, that is a very positive sign. And your little indicator stock that you'll be buying, if you had to nibble right here, would be saying to you, hey, this is a stock that if the market actually turns around, it should participate on the upside. And then I would say to you, actually, if you want to hold on through the break, there's a part B to this, and that part B I think is even more important. So we'll be back. We're looking at a stock that's really holding up well. I think a lot of people will be looking at it, FOE, and I'll be right back. Ferro Corporation. Basil Chapman, Tiger Technicians out. Guys, not 100.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So we're on with Stephen Myrtle Beach, and we're looking at FOE. I want to take just a little longer, and I want you to explain why. When there's a story attached to a stock, and it has this in this case, it's got a really whippy. Let me just do this. I'm missing it right here. This is peak. This is the trough that was made in 2009, and it starts on its way. And it's ferro. It's in the ferrometals, I think it is. And most importantly, it and some other areas in the metallurgic area maybe I didn't use the term correctly, but in the area, are doing very well. And that's saying to me that there's a chance that maybe the economy, that's the reason why I brought up the little political situation just a little while ago, is that maybe there's a stirring of energy out there that we won't notice for at least another month or so. And I think that this is really representing it in a way. Very nice monthly action. It does have that expanding wedge formation, which could turn out to be formidable if it starts to fail, but I just don't see it failing at this particular point, and it's got itself up for sale. So I do like it, and that's the reason why I'm going to suggest that maybe you want to have a little bit more patience, because I could call this, it's a little technical here, peak C1, C2 is today. If there's a lower high bar, you might want to wait just a little bit, but I would definitely be looking at this positively. You've got your core position. And the other part that I was going to add, if you do just nibble here in the 1420s, somewhere around here, but I'm saying that if this makes a retest in the 1375 to 1360 area, you could then add another portion to your holding, and that portion I would split into two, and one would have a stop, give it about a 40-cent stop, and the other one I would try my best to hold it, thinking that this is like a 6-week play, and let's see if in 6 weeks we're not looking at FOE trading not in the 1250 area, but the 1550 area. That's really the way I want to look at it, based on the chart formation, the strength in the stochastic and the weekly chart. And that's, so you can see what I'm doing. I'm trying to say that you've got your core position. You don't have to get excited about adding to it here at 1450, but I wouldn't, 10, 15 shares, just to get a real feel for how it's participating in that new lot that you've just added. If the market starts to pull back further, look how it's doing today. It's up 9 cents. The whole market is down 0.64, 0.65 in the S&P. This is good relative strength. So I like it, and I'm just saying, maybe you want to nibble here, but I would put a bigger position on somewhere in the 1370s, somewhere around there. Hope that helps you. Call me and let me know what's going on.
Very good. Thank you so much, Basil.
Thank you very much for calling. That was Stephen Myrtle Beach, and we're going to go all the way even further south. We're going to Austin in Texas. We're going to Greg. Greg, how are you?
Yes. Good morning. I'm well. Yourself?
I'm well, thank you.
Awesome. Great. Hey, I'm looking at HMY, Harmony Gold Mining, and would like to start a position in there, and wanted to get your opinion if you think that it might try and fill that gap that it made on June 2nd, actually the top of the candle on the 1st of June. I know I'm pretty close right in here. I think I am, so.
I keep wanting to look to see where Harmony is from. I believe it's a South African. Actually, I'm going to check it out right now, because I think I grew up, and one of the mines on the reef, the Vaal Reef near Johannesburg, when I was a teenager, moved from Cape Town, the most beautiful city in the world, to this little mining town. So Harmony, it was called Harmony Gold. Yeah, was it called? It was called Harmony Gold. Los Angeles? What did it say? From where? I just want to check on this. See if it wasn't the mine that I used to ride my bike up and down the stone crushing the side they used to have. Okay, Harmony, USA, Los Angeles. Is that really from where it's? Johannesburg stuff. Okay.
They are. I've heard Tom say that they're a South African.
Yeah. I was sure, but they sometimes they change ownership and all that, and I just want to say, well, I guess, Johannesburg. So it was in the Vaal Reef where I was, a little mining town. That was even the name of the town is called Brakpan, which is brak, which is silt and dirt and soil, and pan is a pan, like a little a dam. So that's where I was from. And just as a teenager for about 6 years or so. And so what I'm looking at here is a stock that made a peak in the weekly chart. I used to have this all notated. In fact, the reason why I know this so well is I remember way back in 2001, I think it was, it had made a peak And it was one of the stocks that said to me, wow, watch out, because in the Chapman wave, we made a peak of significance. It was at $19. I don't know if it was split or anything. And then it pulled back all the way to 6, and then it ran up back to 18, and it came all the way back down. The most recent low was at 53 cents. This is unbelievable. So, okay.
Yes.
Now, this is the way I'm looking at it. If you don't mind, I'm just going to give you a little bit of what I'm looking at in gold as well, because I think they're going to go together, although the gold stocks did way better than gold itself. Now, thinking here, I'm going to have to do a lot of work over the weekend, because if I've got the pattern that I call the Chapman wave stalk leg formation, and it's gone not to a brand new A, but a new leg F in the weekly chart, we have to be careful, because it's fulfilled all the requirements of a pattern that I call the stalk leg, which is a long leg. This has got nothing to do with peak A, peak B. It's just a long leg. Then it stores and makes an oval pattern, and then it spirals to a new recovery high. So the yellow that you can see if you're looking at the weekly chart is the body.
Yes.
I call it the body. And then it breaks above the previous important high. In this case, gold went above the high that was made in the week of May the 6th. And now this is the neck. And if it turns around and starts coming down, which it looks like it might be doing, you could see a pullback into the middle of the body, which would be 1269 to 1260. And if it goes lower than that, you have to be careful that it's not going to retest the actual low. I don't think it's going to. I think there is some buying out there that is important buying. But at the same time, you've had such a huge leg A. It's so unusual in commodities to see a leg A that takes 1, 2, 3, 4, 5, 6 months, half a year, and it still hasn't made a peak. Very unusual. So I suspect we're going to get a mild peak at some point. So let me go back now to your harmony. So my thinking here is that next week, with all the conflagration that's going on with the currencies and the vote and everything, if harmony, because of gold and the dollar, I don't want to get into it just for the moment. I just want to talk about harmony, since that's your question.
Mm-hmm.
Tests, it's at $3.36, HMY, down 6 cents today. And it's, let me just show you something really quickly. You know, in the Chapman wave, we always like to look at peak D as this. That's the target area. That's also the area that which you're going to make some decisions. And it's gone A, B, C. It hasn't gone to a D yet, so I'm going to call the C1. And because the next high of yesterday was just a little bit under it, I'm calling it C2. So now we're looking at something that's a little different. The Harmony's weekly chart stopped dead a number of times. Only once has it spiked and closed above the 200-period moving average, but it spiked about 5 times before that. This week it touched it and it pulled back. So twice it pulled last week and this week. So that 383 level is going to be really critical. Here's what I'm thinking. If you've got patience, I would have like a 3-step program. The first, we've got a break coming up. I was going to say, hold on, if you can hold on, that'll be great, because this is worth looking at, because I want to talk about that little gap that's there and how I think I would plan trades without getting too carried away. I'll be right back, folks. Dow's down 100, and we're looking at Harmony, gold, and we're with Greg in Austin, Texas. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So I need to ask Greg a question. Greg, are you looking at this more as an intermediate term type buy rather than a trade? You're looking as a position play. Is that correct?
Just, I was in it. I got out yesterday, and before I pulled back to where it is today. So, it might be short term, it might be long term. It just depends on where gold goes. But
got it.
probably
Okay,
not
I'm
more than-
so pleased.
Not long term for now.
I'm so pleased you got out and you told me exactly, because that just gives me a real sense of what I can say to you. Okay, number one is Harmony has made a really strong move in the monthly chart, a fabulous move in the weekly chart, and it looks to me in the pattern that I'm looking at, it would normally be a cup formation. But if Harmony takes out any day next week, if it slips under $3.13, around about $3.13, there's a real good chance it's not only going to test the low of 288, but it could go a little bit below it. And I'm looking at a series of lower highs and lower lows, and it's already made a trough C. It could go to a D. That says to me, if you've got the patience and you obviously got in before lower down, I'm going to almost leave it to you, because I think you've already got a good sense, because you've already traded it nicely. I'm going to say my concept is the gap that's there between $3.26 from the gap up on the 3rd of June to the high of the day before, 317, somewhere in there, it's going to give you a sense of whether that's going to form a base or whether it wants to go a little bit down, for a little bit further. Mm-hmm. My thinking here is that if you can start a position, this will be your starter position, not the real one, but the starter position, between $3.12 and $2. No, I'm going to make it lower. Yeah, let's do it at $3.12 to $3.02. That's your starter position. And then I would just say, wait to see how that plays out, at least 3 days. If in fact it's starting to say, I'm making good support above 3, then give me a call and we'll look to see if that's the place to add. I'm also just looking at it. I've had gold in a consolidation, even with this fabulous move up that we've got, I think it's part of a move that says limited upside for now, for now. But there's a way of finding a base, and the base, as I say, in gold really needs to be around 1260, somewhere around there. So let's see how it goes, but I don't think you're losing out anything by just holding it for a little bit longer. And let's see how it plays out. But here's what I'm going to say, because these things get away real quickly. So I would put in that small position. If you don't do anything now and you're going to wait, I would say put in something at 357. That's above 337. And I'll tell you why. If there's any reason for this stock to suddenly jump into the high 350s, there's a good chance it's going to go to 365, 370.
Okay.
So that's a buy on the upside, a gap up buy. That's already what you're going to try, but only a small position. And that way, at least you feel you're in it if it takes off. But hey, thanks for calling. A good trade, a good exit.
One quick question. I was just
Sure.
on the natural gas contract, because the UNG doesn't follow the contract very well. I have that in a daily leg E in the contract, and I was wondering if I'm correct in that, and if it doesn't make a higher high today, that would be
which month is that? Is that NGV or what is that? NG, do you know?
I don't know which month this contract follows.
Okay, let
right
me
now
explain. I've got a leg C right now. If I take the low in the contract, the continuous contract from the low of the 27th of May at 2101, it's in leg C and it's holding really nicely. And in fact, it reminds me a little bit of the stock we were looking at a moment ago. We were looking at FOE. It's having a high level consolidation, but it is in leg D in the weekly chart, but the technicals are still very strong. I think natural gas is becoming the play as the crude oil perhaps consolidates. So if you can see my chart now, that'll help you. It made a peak D, it pulled all the way back, trough A, trough B, trough C, I think, and now it's moving up and it's making a leg C. If it doesn't make a new high from yesterday's high today, then it's a peak C, and it looks like it's trying to grab 2.674, which is the 200-period moving average. Hey, good question. Great. But we've got a slightly different wave count, but it's looking quite good.
Yeah, different contracts too, it looks like.
Well, that's the thing. So I'm only talking, this is the one that I'm looking at right now, which is the continuous.
Yes.
Okay.
Okay.
Thank you very much for calling.
Good day.
Bye, Greg. Bye. So, folks, let me just do this. I was going to do it before I got back to Greg, and maybe it was a little late. I wanted to say, remember what I was saying about the arch formation? There was in the Chapman wave methodology, in the 10-minute E-mini chart, there was a left side, right side price time match. It came to it exactly. Look, this is I chose as the fulcrum, and it came right there, and it went. Now, what's the rule of the H pattern in the Chapman wave? That the bar that closes below the left side low, in this case, 2055.25. The bar that closed below it, that's this bar right here, at 11:30, it went to 2053.75. It has that bar or the very next bar to close above it. If it doesn't, it's going lower. If it does, it can go higher and it'll go to the next resistance level. Well, lo and behold, now I can expand this chart. Look, expanding. There it is. There's your new leg A. Doesn't mean to say it's going to go A, B, C, D. No. It means that this is the bounce of that particular pattern. It did close below it once, which means that you won't go back to the previous major peak, which would be right there at B minus. You could go to the minor peak over there. So we'll be watching it closely, but it could have a bit of a rally. And the VIX index, which is at 1975, up 38 cents. Let me see if I can do this quickly, VIX.X. Oh, it's pulling back a little bit, but it's still holding pretty darn well. So it's gone to a lower low. It has to start there. A, B, it's in B, a peak B. It's just holding well. This is saying to me, be careful. Yeah, the market is not quite done with this consolidation. Don't get carried away on the long side. That's what it's saying to me right now. So let's go back to the ESU. Yeah. So now I'm going to show you the parameters and the way I would look at it. You can draw a V-shaped pattern. I don't know if it's going to be as sharp as this. Oh man, that would just be really, that would be so quick if it does it. That means that in this, using this as a fulcrum, as a pivot, it's a fulcrum and a pivot point. You've got until the very next bar to try to touch this particular high of 2061.75. Can it do it? It's at 2057. Wow, that's 2061. That's 4 points. I don't know if it can do it. So if it doesn't, then I have to be a little conservative. Actually, I should have been conservative right away and explain to you what I'm looking at. That's the fulcrum. I'll expand it so you know what I'm doing. There it is. Okay. That's going to be red or pink. This is going to be green. And this is the way I would draw it. You've had a pretty big move to the downside. There must be some kind of a relief rally. There it is. That's much better. And that says by 12:30 on the 10-minute bar, there should be a rally, and that rally needs first to take out the high of 2059.25. That's just about 2 points away. If it does that, it could be a very quick trip to test the 2061 9-period exponential moving average, which immediately says, hey, there could be a touch of the 2061.75 level. Now, what I always do is I always like to be a little conservative as I'm looking at these things, and if I'm trading it, I will immediately join an arch formation, because that's normally what happens if it fails. So this is what we're looking at. All right. Now, of course, everything just falls apart if it goes under today's low of 2053.25. If you hear that beeper in the background, it's because I still haven't done anything to fix it. I just shut it off. And it'd probably be like that on Monday as well. I'll be right back. Basil Chapman, Tiger Technicians.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So a bunch of things. Let me go to this here. Merck, I was asked about. Merck was acting fantastically yesterday, and suddenly today it's down $1.70. What I've been saying about the pharmaceuticals is that I think they're in a digestive phase after having a fabulous move to the upside. So I think Merck fits that category exactly. It's gone to a peak C in the weekly chart. It could go to a D, but I think it's in a range between the 58s and the 54s will be support. So keep watching it. If it breaks under 54, could go all the way down to 52.50. So that's the question there. Pfizer's, I mean, they're pretty much doing the same thing. Like Pfizer made a peak F top in the daily chart and a peak E in the weekly. I think, in fact, Pfizer could be pulling back a little more here. They've had a fantastic run. Brexit game plan, do you suggest we go flat into, well, we're not flat. We actually have position. I'm just going to get my positions. And you know what? Let the market just take me out or take me in. I don't care what it is. We went short something today. It's up beautifully. We went long. For those who went long, you're still up very nicely. I think it's going to come back to the entry price. So there's no rush to get in. We have shorts. We have longs. I don't know what to say. Even now, the gold, where I'm a little cautious now. We've got a really nice gold position that's done very well. So I'm just going to treat it as a business as usual. I'm not going to get carried away. I'm not going to get overly cautious or overly anything. In fact, I'm looking for buying setups. That's really what I'm looking for. So I hope that, GT, I hope that answers your question. I know that there's a whole bunch of things saying there's going to be chaos and all that. I think it's actually going to be a lot quieter going into it than into Monday and Tuesday. Wednesday may be different. Next question is correlation breakdown between crude oil. Look at this. Here's my crude oil, and we're going to run out of time. Here's my crude oil and the SPY. Green is the SPY, 5-minute chart. Crude oil is red. Look, crude oil is way up there. SPY is down. Yesterday, crude was down and the SPY was up. There's a fantastic relationship, but when they go out of sync, be really careful. That's why I always say, I want my, as I said to my subscribers to my opening call this morning, I want my Sears and Roebuck huge toolkit. I want everything that I can. I might need a plumb line. I might need a Phillips screwdriver for a carrot top. It just doesn't matter. And that's the way I think you have to deal with it right now. Paul says, follow up, Paul. I will be listening today to see if you've changed your tune about the VIX. I don't know what tune I'm supposed to change. The VIX is at 19.91. It is creating a triple-digit down move. We've got that. I talk about the VIX. I spent time. I've done a webinar on the VIX. Paul, I don't know what you're looking at or listening to, but I told you the VIX is really critical here, and it's giving the selling pressure. Let me just show you right now. Am I going to run out of time? I can't answer all the questions. I think crude is pulling back. It's had a nice bounce. I'm going to be watching it closely. Here's the VIX as we go into the final section before you go. Have a great weekend. A happy Father's Day to all the fathers out there. Look, the VIX is still holding very strongly above the 9-period exponential moving average of 18.30 in the daily. This is the first big close that we've had in the weekly chart since it went high like that in the week of December the 11th. Remember what happened in January? So I'm being very careful here. I still believe the Dow is in a sell mode. I'll know today whether the weekly chart in the Dow is giving me a sell signal. I haven't got that officially yet. I haven't even got it right. We'll have to see. So I hope that happens. All I can say is I wait for each indicator to fulfill its time cycle, and I'm waiting now for the weekly chart to give me the signal to say that there's a sell signal, and then I'll see how far it can go down if it goes to a sell mode. Julie, question about the T-note. So as we go out, I'll go to the TNX.X T-note. Yeah, it's the same sort of thing. This is now in trough E. I think I'm going to stick with the TLT and say I think that there's another little bit of buying to come, one final burst next week. I've run out of time. Folks, have a wonderful weekend. Please check out my opening call. I'm going to be sending a lot of charts to the website from Saturday morning. And this is a very important period coming up. And have a wonderful weekend and a wonderful Father's Day for those of you celebrating. And see you Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.